Welcome back to another episode of Getting the Cashflow Game with K&K. This week we had Rich Summers on the podcast. He is the founder of Pac3 Capital, or he is a founding member of Pac3 Capital. He specializes in deal development, sourcing all potential acquisitions and capital, and sourcing equity and debt at both the acquisition and refinance stages. He also recently founded Fortune Cribs. That's a firm that strategically helps investors identify properties with revenue potential as short-term rentals. His firm handles all aspects of the process, from finding the property, the setup and design, the marketing, guest communication, turnovers, and property maintenance, which means that it's hands off for his clients.
So as being an active real estate investor entrepreneur, the portfolio between apartment buildings, short-term rentals, I know he keeps adding to it. He's about excess of 45 million. He also co-hosts a weekly real estate investing podcast, the Multifamily Takeoff, where he interviews top real estate investors, industry experts from all over the world. He also co-hosts a monthly real estate networking event in the local city of San Diego.
Didn't you go to one of those events?
No, I couldn't make it.
We're going to go to
Yeah, we go to the next one. I think it's called Beers and Deals.
Beers and Deals. And then he has
Sorry
the other
if I
one
botched
that's,
that.
he's going to do a new one that's on a boat, right? What would, that one had like another catchy name too. Or cocktails and
Dreams.
dreams. Or something. I don't know. Anyways, he does a lot of meetups. I feel like Rich is like really in the mix with a lot
Yeah,
of like, the local
honestly,
community.
he, it's kind of somebody that like was, W-2'd, went down that path, kind of woke up one day, what am I doing? Had a major shift, right? Getting out of there, like literally cashing in, I think his 401k, buying property.
He was like a flight aviation traffic. He was an air traffic controller,
which is honestly a crazy job, and just got out of that and enough of the grind. And here he is, just going after his passion. He's actually got he's really great to follow, really good content, very consistent on social media. So any of you guys that want to build a brand and an audience and stuff, he's somebody to definitely watch, because he's definitely really good. And he's
super consistent, I feel
like.
like.
He's on there all the time.
He travels, he's been in Greece for weeks now, and I feel like he's been super consistent with his content and everything. And the other thing that I love about Rich is, I always say this, is if you want to take advice from Grant Cardone, that's great and all, but if you're just like the little guy trying to grow and trying to build a portfolio, Grant's advice is probably not realistic, because he's been at this level for so long. And so a guy like Rich has been doing this for only a few years. So I feel like he's a really great story for people to feel like, even though this seems like super difficult and almost impossible, like Rich has done this in a short period of time. He got together with a group of guys that were also air traffic controllers. They all got together. They founded this, syndication company. They're doing things. They're living a great life. They're traveling. They've had success. So it's like, even when you think it is so difficult and impossible, this is a story of a guy who's been doing it for a few years, and he's living life on his terms. He's doing fabulous, and he's making cash flow, and he's having fun while he's doing it.
Yeah. I mean, and I would just say, I think he has, I've watched his videos, they redid the Scottsdale VRBO. He has really good taste, really good eye.
Very cool.
Really good style. Yeah. I will say this, you can tell he's very hip on what's hip, if that makes any sense. So that means if you're going to these trendy hotels or a trendy VRBO, he would be a guy that could potentially own it or do it, because he has his eye on the prize. He knows what's cool. But anyways,
one last thing. I do like how he's pivoting too in the market. So for example, everybody's kind of in this vacation rental space. I won't give everything away, but his company and his partners are doing some cool things to kind of pivot and kind of protect themselves with the shift in the market. So I love that he's sort of thinking on his feet and pivoting when needed. I love that. So listen in to see what he's doing and learn about Rich.
Yeah, so let's jump in with Rich.
If you're a real estate investor, you know that aside from cash flow, you also get huge tax benefits by investing in real estate. But are you taking full advantage of all the potential tax benefits? We've been working with Tim Looney at CSSI for a few years now, and he's saved us and our clients hundreds of thousands, if not millions of dollars in taxes doing cost segregation studies on our properties. Let me give you an example. We bought a property in 2019. If we had just used straight line depreciation method, we would have saved about $18,750 on our taxes. But because we did a cost seg, we saved $258,000 in the first year. That's $239,350 more in the first year alone. The other great thing is if you're classified as a real estate professional, you can apply this to other sources of income like your W-2 income or 1099 income, and you can also roll over any unused depreciation to future years. If you've owned your properties for a few years already, don't worry, you can still do a cost seg and save big on your taxes. This isn't tax advice, so consult your CPA to see if you qualify to take advantage of these benefits. And if you're interested in learning more, listen to episode 104 with Tim Looney. You can call or text Tim at 318-469-9861 to schedule a complimentary property analysis, and make sure that you mention that you were referred by Kenny and Krystle. For sure. Well, Rich, thanks for coming on.
Yeah, absolutely. Thank you for having me.
Yeah, I just want to see, I did a lot of research on you before this, obviously, and I saw your...
Stalker.
Of course, I stalk everyone. I'm a female. What do you think?
Yeah, sure.
I stalk everyone. But your Instagram has a ton of information on it. Really, really great content. And then you syndicate and you also do vacation rentals. Mm-hmm. Is that right? Can you just give us a little background into how you got here?
Yeah, so I grew up middle class. My mom was an immigrant from Taiwan.
Oh, sick.
Both of my parents know the value of working hard for your money and saving your money. And I was taught from a young age to go to school, get good grades, go to college, and get a job. And for the most part, that's what I did. Have a background in sales. I was selling cars while I was going to college here in San Diego. And that was my first taste of like what it was like to control your paycheck to a certain degree. And I knew I wanted to sell real estate. And so I got out of college and I interviewed at a couple of commercial real estate brokerages, CBRE, who's still around, and Grubb and Ellis. I don't think they're around anymore. And it was a couple internship positions, and they were like, hey, we love your hustle. It was 2008. But they said, this is not a good time to get into the industry. And they pulled the positions, right? So I found myself on a car lot wondering, like, what am I going to do with my life? And I stumbled into an air traffic control position with the government. They were hiring.
Whoa.
So random.
So random. But my dad was a pilot when I was a kid growing up. And so I was always kind of like nerdy into aviation. And so I thought, okay, well, why not? Like, let's just do it and see what happens. And so they hired me. I flew out to Oklahoma City. And that was my first like assignment out there for 6 months. That's where the training was. Got through that, and then I ended up in a town called Palmdale, California.
Okay.
Yeah.
They have a big center
Military,
up there.
right?
Yeah. So it's FAA, like federal job. Ended up being up there for 6 years.
Oh,
And my end game was always
Palmdale's like
yeah.
nothing there too, right?
Yeah, it's remote. They call it the armpit of California.
In Top Gun, they said that's like where all the the military people that didn't make it to the okay.
Exactly.
Yeah.
And so anyway, so I finally was able to transfer down here to San Diego, and so I ended up doing another 5 years down here. And along the way, I read the book Rich Dad Poor Dad. And I
Such a
thought,
good read.
Yeah, I remember real estate. I'm like, man, I got to figure this out, but let me get into it on the investment side. And so I started listening to podcasts. Bigger Pockets was one of them. Started reading books. Did nothing but like just educate myself for probably 9 months. And I was working, but then outside of work, I was just educating myself. I was going to networking events. And then at the time, I did what a lot of people think is a little bit too risky, but I cashed out my 401k and I pulled out a home equity line of credit against my primary residence.
What year
here.
is this right now?
This is in 2019.
Okay.
So just a few years ago.
Okay.
Yeah. And that was my seed money to get started. So first deal was 11 units in Cincinnati, value add property, C-class property. And then shortly after that, I partnered with two of my partners who I still have today. And we JV'd on a 32 unit building in Indianapolis, also value add C-class. And then we launched a podcast. We partnered with a group who owns 8,000 units in the Carolinas, and they taught us everything from, how to underwrite deals, how to qualify deals, how to raise capital, all their systems, all their processes. They have their own in-house property management company. And so we co-sponsored a couple deals with them. And first one was 150 units in Greensboro, North Carolina, the Arbors. And then shortly after that, it's Timber Creek Apartments, which was 145 units out there as well. And then earlier this year, I launched a entity called Fortune Cribs, to where we help clients buy short-term rentals around the country. We'll operate them, and really the entity is like to kind of manage my short-term rental portfolio as we grow it, but also some boutique hotels. So we're doing our first boutique hotel deal right now up in Northern California,
Nice.
And then Fortune Cribs will actually manage that free of staff. So that's kind of my story in a nutshell.
Awesome. Yeah, we were talking about that off air, is that I think it's such a smart thing, especially with all the vacation rental laws that are coming into play. Like the idea of going into like a boutique hotel, it's legal hospitality and you operate it relatively the same way as you would a vacation rental, or you can anyway.
Yes, absolutely. And I think like right now with multifamily being so compressed, cap rates have compressed, the yields have come down. it's hard to find good deals out there, and these short-term rentals, I mean, even paying a management fee, you're still looking at, 10, 12 caps, right?
Yeah.
Yeah.
Absolutely.
Yeah, I think, well, if you just listen to a lot of other podcast indicators, I think everybody's kind of like, yeah, we're just taking the summer off. They're kind of like just chilling. The big guys are like, they're like deal. There's just not much going on, but there will be. Yeah. They're just waiting.
Yeah.
I think
that's like the name of the game in real estate, though, is like being able to pivot when the market changes. You can't just keep doing the same thing all the time. You have to be able to read the market and pivot when needed and keep making money, keep the machine going.
So are you done with traffic control?
Done. I punched out of there December of 2020. So once I had enough passive income coming in and enough for me to feel comfortable, I punched out of there and I said, you know what, I'm ready for the next chapter. And it's been an exciting ride ever since. It's incredible once you leave a 40, 50 hour a week position and then now reallocate those 50 hours to work on yourself, how much more you can get done.
Yeah, honestly,
was that scary though for you? I just feel like the safety and security you're taught your entire life.
Yeah, it was. I mean, all those things I did, like every step was scary, right? Like cashing out the 401k. People and like friends and family will tell you all the risks involved.
Oh, they're probably thinking he's lost his mind. What is he doing?
That usually means you're doing the right thing, though. When everybody tells you this is risky, you shouldn't do it. That's usually the right move.
100%. And then when I partnered, people were like, "Oh, don't partner," because they hear all the negative stories. But the takeaway is this: is like all those risks that people allude to are real. So put some weight on it. But on the other side of the balance scale is another risk, and it's this. I could be 80 years old one day, laying in my bed, staring at the ceiling, kicking myself because I never fucking tried anything in life. How about that risk? Because that's a risk a lot of people don't talk about.
Yeah, because we're in lending, and so I always say this. I always say the conversation you have with yourself from 20 to 30 to 40, 50, 60, 70, 80. Yeah. So we're in a fortunate position where we've been doing loans for almost 20 years, which is crazy, but we get to talk to clientele in all this at all
stages,
walks of life, all financial and all that. And I when you talk to a 60, 70, and 80-year-old that's probably stuck in a W-2 job and that I ask him, I go, hey, and it's never like, it's always the regret. They're like, I should have bought more property. I could have bought a smaller house. I didn't need all this car and all this. And now they're more stressed going, what am I going to do? Like I could have done all this stuff. I didn't do it. They just picked up the book at 60, Rich Dad, Poor Dad. Yeah. Like, I need to buy real estate. And they're like, I'm doing this to teach my kids so they don't make the mistake. And the mistake isn't that they work. The mistake is that they always had this in their mind or their body. They just never did it because of, it's the next year, next month, next week, how
well, you're not taught this in school. Like, you're taught to go to work and save your money. And if you put X amount in there, you'll have $1 million in your 401k by the time you retire. And then you realize in California, that's like nothing.
You're exactly right. You're exactly right. And I think the other part of it is getting around the right people, and sometimes that might mean
almost it,
swapping out certain friendships that are maybe no longer conducive with where you're trying to go tomorrow, and getting around players that are actually doing it, and getting around those right mindsets. I think that's such a big lever that's not talked about enough.
So how did you meet your partners? I mean, because it's interesting because you got into this like in 2019, which isn't that long ago, and you've made some strategic partnerships that have gotten you to where you're at today. How did you form those relationships, or where do they come from?
Yeah, so I actually met my two partners that I have today in a break room at the air traffic control facility.
Oh my God.
Yeah. Wow. So this whole thing came to fruition in the break room, in between working airplanes on a radar scope, and we just started talking about buying real estate. And one of my partners had just closed on a fourplex on his own in Cleveland, and I thought it was the coolest thing. And that was right around the time that I read the book Rich Dad Poor Dad. And I was like, we got to figure this out. And so initially we were looking at doing individual deals on our own. And then I came up with the idea. I was like, what if we put our money together and then JV'd on something? And then that was the 32 unit building in Indy.
Are they still working? Are they out?
No, they're out as well. So we all left. Yeah.
That is awesome.
Yeah, we all punched out of there. And we walked away from pensions too, because if you do 25 years, they'll pay you a pension the rest of your life.
And honestly, that's kind of a more gnarlier job than people think too. Yeah. Air traffic control is more stressful, right? It's like extreme. It's like you just think it's like, oh, you're kicking back. It's not really. That's not how it really goes.
You know what? It's funny because when I was doing it, people would always ask oh, is it stressful? But I never thought it was. But now removed from it, I look back and I'm like, wow, the lack of sleep, the shift work, working constant weekends and holidays overnight, never being around your friends and that sort of thing. But then also when you're in there, you got to turn it on.
Yeah.
And I'm so much more relaxed now.
You can't really make mistakes either. It's just it's kind of like a problem.
Whoops.
There was a guy that I knew that was one. He says actually they got paid outside, and he says it's just way more stressful than people think because you're just like you said, he's working all these crazy hours.
Yeah, absolutely.
It was interesting. He said that this morning when I was getting my blood drawn at that place, the guy Tony's in there, he was like 27. He's like, I just want to level up in life, and I didn't go to school, so he's like, I think I'm behind. And I was like, well, there's a hack for that. He's like, whoa, what do you mean there's a hack? I said, just get around other people like that are like a mastermind. He's like, what do you mean? I go, there's a lot of smart people, entrepreneurs that never finished school, dude, that are crushing it. Yeah. He's like, you don't think I need more schooling? I go, not at this point. I think you need to get around different people, like you said. Like, I don't know who you're around, but if you're not leveling up, it's because you're just not around people that are making you level up. And that's where I think it's more powerful and it's not talked about enough. Like,
no, absolutely. I completely agree. I think when you get around old friends and like the only thing you have in common is talking about the past, well, I'm more concerned about the future than the past, right?
Yeah.
And so I think if that's the only thing you have in common, it's definitely a red flag, And people are like, oh, you changed. Well, it's like, yeah, without change, there's no growth, right?
Of course, you should be worried if you haven't changed. Yeah, it's wild. We are not like, it's so funny because I joke about when we hang out with people. I'm like, it needs to be productive. Like, I'm not the kind of person that just like goes over to someone's house and like chills on the couch. Like
we're just not.
We're doing things. We're being productive. We're trying to build things. Like help our friends, make money. Like those are the things we love doing. And I think it's just like anything. Whenever you pick up a new habit, like it's hard to get started, but once you get going on it, it's pretty addictive.
I completely agree. I think there was a period when I quit the air traffic control job to where I was doing some traveling, I was kind of hanging out, and I was like, well, this is cool for a couple months. But then I got bored. I was like, man, I need more. And I think what I realized is like what truly makes me happy in life, and I didn't realize this till recently, is continual growth and progress. If I'm not growing, I'm not progressing, I get bored.
Yeah, I'm a part of a mastermind, Avengers, and it's 100 mil. If you've heard of any of those.
Yeah.
So there's a lot of entrepreneurs. So it's kind of cool because I never was a part of a mastermind. We kind of just like sat in our offices and did all this stuff and just work, kind of like you did. Just we were just doing this. And then we decided to share it on a podcast. Like, I didn't do all this stuff. I said, I didn't know I was supposed to air that I did all this.
Yeah.
And then I started realizing that, let's get around different people.
Absolutely.
And so I walk in a room and I'm like, there's 100 people. You don't know who they are. And now 2 years later, I'm into this. And it's like amazing. I walk in a room, like I know everybody, what they do, all the levels. But when I walked in, everybody to me was on the same playing field. But then you realize they're really not, but they just act like it. But then people that could just stop and retire very, very comfortably, they're just like, no, that's not the game. That's not the freedom, because you just get bored. And it's I don't know. I just think like people think that sounds fun. Yeah. It's like people say when they exit a company, they go travel and go crazy for 6 months, and they're like, let's do another one. Like, are you crazy? They're like, I'm bored. Right. And so that's how these guys are. And Krystle came to the last one and you met them, and some of them are just like, I'm done. I'm not going to build a company, but I'm investing. I'm doing this, but they just cannot sit still because they're like, dude, I'm just going to die.
Well, I noticed too, once you reach a certain level too, like where you could retire today if you wanted, but you're not, is the new, I think, game is really like helping other people. Yeah. Like that's where you get some like, you get like a good feeling because you're helping other people grow, and you want to help your friends and your family to build wealth and to have financial freedom and all of that kind of stuff, which is really cool to see, like in a group of people that are now at a level where they're like, how can we help other people? Yeah. How can I do that?
I completely agree. There's definitely a feel good about it, but it's also like, helping someone buy their first, rental property.
Yeah,
like it's life changing for them, right? And if it wasn't for you, they probably would have never done it, and that's a powerful feeling.
Yeah. I mean, we do that for a living, and we deal with a lot of people that are first time buying. So it's exciting. They're like, we have the same conversation, and it's this, and it's like, they usually end the conversation going, damn, I never thought of that stuff. I said, well, how could you? Yeah. It's your first time. Right. I'm 18. Even if I never bought anything myself, I'm 18 years in this business. Like if you bought your first deal to now, the questions you ask, and I always tell people like, I'm going to do this, I'm holding this forever. And I said, no, you're not. The guy, I go, No, you're not, because the conversation you're going to have with yourself or your partners on the third deal is way different than now. Like you think, I said, I don't think, I just know.
Yeah.
Like it's crazy.
100%.
Yeah.
So I also say the same thing about partnerships is like, be careful, because it's like a marriage. Like you definitely want to vet and make sure and all of that kind of stuff. So what is kind of your advice now that you have had partners and it sounds like everything's gone well with your partners? What were the kind of criteria or things that you guys discussed to make sure it was going to be successful?
Yeah. Well, the first thing is you always want to make sure that they're just a good human being, right? Yeah. Do you guys have the same morals? Are they going to do the right thing? How do they talk to others? How do they treat people, right? Because as you're going to grow as partners, you're going to bring on team members and people that are going to help you grow the business together. And you better make sure that they treat others the way that you treat others, right? Or want to be treated. And so I think that's the first thing. But then the next thing is you want to make sure that you complement each other well. For example, I love the art of the deal. I love sourcing deals. I love networking with the brokers. I love trying to like vision how the deal is going to play out, what the business plan is going to look like. But if your partner is also a deal finder, you guys aren't going to complement each other well, right? And so one of my partners is really like analytical. He loves underwriting. And so we complement each other really well, right? And typically the deal finder is going to be good at raising capital as well. So I kind of focus on both of those arms. You know, capital
You're the social one.
Yeah. That's what gets me excited.
Yeah.
Right?
Yeah.
You know,
You're like, I don't want to look at the numbers.
Yeah. Like hanging out here with you guys right now, just chatting real estate. Like I get excited about this stuff, you know? And so, you know, and then there's always going to have to be someone that does a lot of the back end stuff, you know, some of the more boring stuff, but some people love that kind of stuff, you know? And so I think those two things are what's most important.
I was going to ask you too, before we start digging into more of the stuff, what do the people think now that we're kind of like, why'd you cash out 401k? You quit your job? Like, what's your family, friends? What are they kind of like still cautious? Are they stoked for you? Or?
You know, it's funny because like, you know, early on, a lot of people said, oh, it's too risky. Even my parents, they said like, oh, don't partner, don't raise money, don't quit your job. But now they see a little success and they're like, oh, like they're happy for me, right? So now they're supportive of it.
That's cool. I think that's one thing people need to remember, because you hear people talking about like, you know, like a Gary Vee or some of these guys will be like, you know, screw your family. Who cares what they say? Don't listen to them. They're hating. And it's like, actually, no, it's coming from a place of love. Yeah. But that means that they're just scared for you. Yeah. Like they want the best for you. And it's not necessarily a bad thing, but it also doesn't mean that you should just do what they say either, you know?
Yeah, exactly. So it's a lot of it's putting on those blinders and getting around the right people, you know?
Gives you the confidence.
Yeah,
it changes.
Absolutely.
Yeah, changes. So I want to talk to you about your the vacation rental business. We were talking outside how obviously there's multifamily we'll get into. I think we always say multifamily is pretty like basic, boring 101, but it's solid as a rock. That's just what I'm sure you agree the same thing. Yeah. It's kind of like almost indestructible. We went through COVID. Everybody's like, nobody's going to pay rent. And everybody freaked out. And then everybody realized they paid rent because where are they going to go? And then I think vacation rentals went through the same thing where it's like everybody canceled. And everybody's like, oh my gosh, it's over. And then it went kapoom. And now it's like everybody needs to get out and travel. Yeah. And I'm part of I told you, mastermind. And they're saying, and maybe you know this, you know, people raise money to buy homes. People raise money to do startups. People raise money to buy multifamily. But now the new big thing is people are raising money or putting funds together to do the VRBO, the vacation rental model. Yeah. And they're starting to buy a lot, package it from the management, the whole thing. I think they're going to start selling this to Wall Street. Yeah. It's like there's going to be the first acquisitions because, like you said, the returns are crazy if you run it right.
Absolutely.
So I was going to ask you, how did you get into it? First of all, like, how did you just get into that space?
Yeah. So I kind of backed into it. So actually, I did a couple no money down deals. They were primary residence loans through Navy Federal Credit Union here in San Diego. And I technically, you know, lived on the property for a little bit while I was setting it up. But after you send those loan docs, I mean, there's no say in what might happen to your plans, right? And so first one was a 2-bedroom condo here in Bankers Hill, San Diego. Launched that thing and right before the pandemic. And then the pandemic hits and like, you know, the ADR went down, but I was still keeping the thing booked. And then the second one was actually in May of the pandemic during Mother's Day of 2020. And there was a lot of bad news, right? People were terrified at the time. And there was this property in Linda Vista. This couple had like basically rehabbed this whole property. They had furnished it. They built an ADU that was brand new. And they literally furnished it and they were going to STR it. And then the pandemic hit and they got scared. They even had a couple reservations on the calendar. And so they listed this thing on Mother's Day. And I remember showing up to tour it. I went direct to the listing agent.
Right up here somewhere.
Yeah. And it turns out the listing agent was the seller. And so I was asked, it's a beautiful property. And so I was asking her, hey, do you guys have a lot of showings scheduled? And she's like, well, there's a bunch for tomorrow, but none for today because it was Mother's Day. So I said, hey, I'll give you whatever you want for it. Let's lock it up right now. And there was also a garage under the ADU that had 9-foot ceilings. It had a level slab.
Oh, my
You're like,
God.
okay.
Access to electrical. And so I thought, well, this could be a JADU.
Yeah.
And so I said, I'll give you whatever you want. So we locked it up that same day, and that thing has been cash flowing like crazy. I mean, ever since
There was
I
a
bought that
small window during the pandemic
There
where
was,
there were a lot of deals
Yeah.
to be had.
Yeah, absolutely.
Fear definitely means that there's opportunity in
Absolutely.
the market.
I mean, if you learned anything from like the Warren Buffett, he just waits for fear, and it's like that's when you deploy, right? If you have the guts, if you know. And some people, it's funny, they never bought before. They enter in a market and they're like, I'm not scared, and just buy. They just bought right at the right time, like, and you're just like, you knew. You're like, oh, you kind of know, but you don't know. But
Yeah.
So, so you started there. You're running your own then.
Yeah. So I was self-managing at the time. And then as I was kind of growing the portfolio, I slowly started hiring like team members. The first one was an assistant who did like a lot of the guest communication for me. And then as I started hiring more team members, building out the team, I was like, okay, well, maybe we can manage for third party. And so started doing that. But now we kind of see this entity as like something that we want to keep boutique, because as we started to bring on more and more third-party clients, you realize it's an emotional investment for these people. A lot of the clients invested in these syndications with me, these apartments, and that's very like non-emotional. You're investing in an LLC. They're like, here's my money. And you never hear from them, right?
It's not sexy. It's not fun, right? It's like,
Yeah. And so I noticed with a couple individuals, it's like, okay, you bring them over to the short-term rental side. Now their name or their LLC like is on title, and they want to be part of every little decision.
It's a home, you're like, oh.
And so I'm like, I told the team, I'm like, look, we're investors first, right? We're not yes people. Let's treat this entity to not only manage our own portfolio as we grow it, but also the boutique hotels that we're going to take down with Pack 3. And then let's only work with select clients and the best properties, and that's it. And we'll say no to everything else. And honestly, it feels good to say no. You know?
Oh,
it does.
The first time I said no, I'm like, who else can I say no to? This is great.
Yeah, absolutely.
So I think that that's like an empowering thing too. And you never realize, because I think when you first get started, you want to say yes to everything because you're new and you feel like you're kind of like having to earn your keep.
Absolutely.
And then after that, you're kind of like, why am I still doing this? See, I've built a whole business and I can't say yes to everything. And you don't realize like the opportunities that you're not able to see when you're dealing with like, those high maintenance people or issues or whatever.
Yeah, no, you're absolutely right. And sometimes you just don't know until you get in with someone, and then you're like, whoa, you see this other side. But I think we've been doing a much better job of kind of qualifying on the front end and just being like, hey, you know what? We're not going to be a fit, but let me introduce you to another management company that might be a great fit for you guys, That's
how you do it.
And it feels wonderful.
Yeah.
It really does. The last thing I want is 200 client properties with 200 different headaches and then my team being all stressed out because of it,
Yeah, and I agree. I think it's also just like being aligned. Like I learned too, I had certain clients that like they were so easy because we were both aligned in our vision and the way that we handle things. And then I think some of the higher maintenance clients, you're like, maybe there's somebody else who's just a better fit for you that's going to make you feel more comfortable.
Yeah. And they're usually
and that's okay.
Right?
Yeah.
Exactly.
Well, when you manage, you're managing like three things. You're managing the asset.
Yeah.
You're managing the people that live in the asset or visit the asset. Yep. And then you're managing the personality of the owner.
Yeah.
And that's what people don't realize about property management. If you have 200 different properties and 200 different owners, you have 200 different personalities.
Absolutely.
Not even. You have more. You have like 600 or whatever because you have your tenant.
No,
you have
I was
the
saying
owner,
just as the owner. That has nothing to do with the tenant.
Yeah.
The tenants, here's the tenants come and go. They can be gone in a week. I say, God, but us, we have a tenant for a year or two. Like, we cannot. This person's just never going to leave us alone,
Absolutely.
So.
Absolutely. And that's why I love this boutique hotel model, because I'm like, okay, we can go and pick up 10, 12 rooms at a time. And so it kind of gives you a little more economies of scale from an operations standpoint. It's a little bit easier to managed because you get the same repair maintenance, you get the same housekeeping and that sort of thing. But then also the owners is me and my two partners, right? And so you're not dealing with all these different personalities that you got to,
Are you up and running on that yet, or?
So we got our first one under contract. We're closing on it August 8th up in Shelter Cove, California.
Okay.
This property is so unique. It's on the water. The seller has owned it for 20 years.
Wow.
It's a 2001 built property. So it's not even that
Yeah.
old. It's got great bones. He's taken great care of the property. It's beachfront, 10 rooms. They all have living rooms, fireplaces, kitchens, and literally all 10 like overlook the water. So my partner Mike and I, we flew up there after we got it under contract. The seller flies us up there at a small airplane, and it's literally like you fly into this airport, right? And it's like Northern California up near the Oregon border, and there's a golf course around the airport. To the left of the golf course is this hotel, and it's a very like rural area, like it's very quiet. They call it the Lost Cove, right? And so we go up there, we're like, man, it's very quiet up here. Like, I don't know if our business plan's going to work, but we actually got in with the hotel manager at the hotel next door. That's exactly 10 rooms. And we ended up having some drinks with her that night. She ended up showing us all their revenue, all their books and everything.
So cool.
And so they were doing 5X the revenue this hotel was doing just because the operations were much better.
Wow.
So this seller is like no marketing, nothing on Airbnb, nothing on Vrbo, literally just relying on this old website and just taking direct bookings. Well, no one knows about them. They're not on social media, nothing. And so by seeing the hotel next door and what they were doing, that gave us the confidence to really move
Proof
forward.
of concept, yeah.
100%.
How'd you find the deal?
It was sitting on LoopNet. That is the craziest thing.
Gosh, always, right?
Yeah.
People
It was
always
sitting on
say
LoopNet.
like LoopNet's the worst, and I'm like,
Yeah.
you're wrong. Like
Yeah.
we've gotten so many deals that were on LoopNet that just
Yeah.
kind of went stale, and people stopped
Yeah.
paying attention.
Stuff
And they
can
were
just-
solid
yeah,
deals,
I
like they
mean-
fell out of escrow a few times or whatever.
Yeah.
And you're like, there's perfectly good deals you can get on LoopNet.
Absolutely. I remember I was actually down in Medellin, Colombia, sitting in a coffee shop, and I was just browsing LoopNet, and I saw this deal, and I was like, okay, let me call the broker. And it turns out, you guys know AirDNA. They put out a bunch of product for short-term rentals. It turns out this town was like on one of the up-and-coming like markets, and I was like, oh, that's interesting. So I called the broker, and she was like, yeah, there's been a lot of groups interested, but people are afraid because it's so rural. And so I think we were the only group that actually took the time to fly up there and do some due diligence. And we realized, wow, this is like a really good deal. The seller's basically giving it away to us, $1.5 million.
What?
Beachfront.
That's nothing.
And so we're like, man, we can turn this from 1.5 to 5 in 12 months just through renovating and bringing in good operations. And there's a lot of other issues with the property, but they have in basically on-site management. This couple lived there for 6-7 years now. And check this out. Like, we go up there, literally, we stay at the hotel. There's one occupant out of the 10 rooms. So they get 10% occupancy. But the managers are there, and they're taking up 2 of the 10 rooms, just living there. They've been there 7 years, beachfront. And the hotel manager next door, she's like, yeah, I used to work over there. I know them. She goes, they're stealing from the owner. They're basically getting paid to live there, and they're not even working on the property. They go and take side jobs in the town, and they don't put any effort in the property, and it shows, But so the first thing we're doing is we're getting rid of them. We're bringing those 2 rooms online.
Yeah, for sure. Oh, yeah. Go rent over there.
How do you handle like these out of area projects? Like, you're based in San Diego. Do you spend a lot of time up there initially getting things set up, or how do you guys work within your partnership to get properties kind of like renovated and stabilized?
Yeah. I think there's a lot of systems and processes that have to definitely go into it. I think with any like short-term rental hospitality stuff, you really only need 2 boots on the ground. That's housekeeping and then maintenance, right? So if you can tie those 2 things down, you can operate virtually or remotely if you would. But then the rehab is the tricky part. So with this particular deal, we don't know any contractors up in that area. It's hard to fly contractors in and out of there, but the seller has a construction business, and he did take very good care of the property, and he knows it very well. He's going to do seller finance. And so
Smart.
he's going to seller finance the deal. And so we told him, we said, look.
Because you'd basically have to pay cash for that otherwise, or hard money or something.
Tough,
Yeah. And so we said, look, like he's attached to this hotel. It's a very emotional thing for him. He's owned it for 20 years. It's like his baby. So he wants to see it do good. So he's going to stay on and seller finance it. And so we said, Brian, his name's Brian. We said, hey, look, what are the chances that we could use your construction team and we could use them with your expertise to rehab the hotel? We want to rebrand it. This is what we want to do to it, but we want to bring it back to life, and we want you to be a part of it with us. and he loved it. And
That's so cool.
So his team's going to fly out there. They're going to stay at the hotel and just crank it out, you know. And so these guys are out there, you know, away from their families. They have an alignment of interest to get it done quickly. So we're going to shut it down in the wintertime when it's slow season, crank it out, and then we'll refi into some perm debt once we get the revenue up and we prove the new model. But the coolest part is this, is like the seller is going to finance the deal, but when we pay him off a year later, guess what he's going to do? He's going to give us that money right back for the next project.
Yeah.
That's the real kicker. You know what I mean?
Yeah.
Yeah, because you're building friendship, bond, and it's like,
Well, and he's also getting the business, like for his business, you know, that's really cool.
Yeah,
absolutely.
What are you guys gonna make it just cool, trendy, Instagrammy, the whole, like, just to get people there?
Yeah, we're gonna do like really cool marketing, new branding, new website. We're gonna do a container pool actually. That's gonna be right out there. And so you kind of see through it, and then you'll see the ocean there. It will have a jacuzzi. We're gonna do some heat lamps, fire pit area, outdoor games, and then just really operate this thing free of staff. But it's gonna be amazing. And I think after this one, the guys and I are like, let's buy more of these deals, you know. And they're so unique, and I think there's so much value add. I was telling her before we started recording, you know, the thing with multifamily right now is like you might have to look and underwrite 200 to 250 deals to find one to buy right now. With boutique hotels, that's not the case. You might look at 5 deals to find one good deal.
You know, what's funny is you mentioned the boutique hotels. So when the pandemic hit, if you remember this, well, Robert Kiyosaki didn't get rich off real estate by him. It's Ken McRoy.
Yeah.
So they were talking about, I don't know if they did anything. They started a fund. They're going to start a fund to buy boutique hotels because they think people in the pandemic, and even now, it's like they're going to want to let it go, or there's going to be problems. And we were on a call, like, remember that call we were on? Like what's that? Like the Zoom call, but where everybody goes on there, the technology, not Instagram, Facebook, where everybody goes on there. You all go in a room, you chat.
Oh, to the chat.
And there's this guy that does all these hotel lending.
Yeah.
You're on there, and he's telling
Clubhouse.
Yeah. He's saying how many lenders were taken back to hotels all over. So I think a lot of people might have got out of the business or let them run the ground. And I think,
but also I think the smart people like you guys,
you're onto something.
Like, well, yeah. And also like what we've been hearing a lot too in the Avengers is like experiential real estate, right? So you're talking about the vacation rental that you just bought in Scottsdale and all the fun things that are going to be on the property. And now you're doing the same thing with this property. And people really like our generation really wants to have an experience if we're going to go on vacation. It's not necessarily like luxury. People are talking about experiential real estate, like where you want to go for an experience. We don't necessarily care about having like the highest end luxury experience. Is more like I want to have like a unique experience, like something fun.
You talk about that more.
Yeah, absolutely.
They had a pool that was, you know, like, it's like you talk about that, and then you're going to post it, and you're going to tag people, and then that's what you want.
We had a gentleman on our podcast a little while ago, and I forget the name of the book, but he talks about demographic shifts, right? I think it's called Big Shifts Happening Ahead, and so he labels all the different generations from the 30s, if you were born in the 40s, 50s, all the way up. But he said our generation. The millennials, he called them the sharers, because not only do they want to experience something, but they want to share it with all their friends.
Yes.
You know, and that's exactly what you were just talking about.
He was just saying that too.
Wait a minute, is that the guy, did he write something like 25 years ago and predict stuff?
No, this one was a book called Big Shifts Ahead. I forget the name of the author, but you guys should have him
older?
on. He's maybe like mid 40s, late 40s.
Okay, because Tony Robbins just had some guy on coming to his house that he predicted this stuff 25 years ago, but he was just talking about
John Burns. Okay.
Yeah, he's talking about the same thing as like our generation, because of like the movies he watched and how we got brought up. We're more like, let's do stuff together. Yeah. And then he was saying, as we can see with our politicians now, they all hate each other and they can't get along. They get in a room, they want to kill each other. Yeah. He's saying like back in the 1800s with politicians, now they cuss each other out. Back then they had guns and knives and they were fighting each other in a room. So he says,
we're the peaceful generation.
No, but he said because of social media and how we were raised and the movies we're watching, he goes, you don't realize it's all these things we got. He goes, think about they were talking about all this stuff, but he was saying how we are just changing our generation. Yeah. You know? And freedom isn't like I got a great job. Freedom is more like I can go do all these fun things in my life and have experiences, right? Our generation. We want experiences.
Absolutely. Yeah. And who doesn't like a good experience? I love a good experience.
Yeah. You know? Yeah. And I think even when people that haven't gone somewhere, they're like, where are we going? This seems a little weird. Why are we going to the hotel? And they go, oh, and it's like they're sold.
Yeah.
Well, just like
Yeah.
Joshua Tree, you know, that's like blown up out there,
Yes,
and they
it
have like
has.
the coolest vacation homes, and
Yeah.
it's like, what's in Joshua Tree? Really not much, but now you have all these
Exactly,
like
yeah.
Instagrammy
Yeah.
worthy, you know, like vacation rentals. You just want to go there just to go stay in a cool place.
Yeah, you're exactly right. And there's so many of those little areas like popping up everywhere right now.
Yeah, well,
Yeah.
COVID, I think, pushed us all there, right? We're like,
Yeah.
I mean, we were traveling a lot during COVID, and I think a lot of people were giving us shit because we have small kids, but we
Yeah.
were going and we were traveling all over, and there's people that were like, yeah, we're just traveling until we're told to come back to the office
Yeah.
at Apple or Google. They're all these guys.
Yeah.
So they'd be working all day and all this, traveling all over, but they were like, they were going to places. There's like, we're just seeking the experience. Get the
Yeah.
hell out of here. And they're like going to Mexico and in the mountains. There's like all this stuff,
Yeah.
you know?
Yeah.
So I think you guys are definitely on to something. I do think that there's so much money and flow of money going into multifamily, you know, and like we always say, they weren't really coming into California or San Diego because everybody's scared of this market.
Yeah.
But we went to Texas and we went to Florida, and we spent a lot of time looking at deals, traveling, and we're like, the guy's like, basically, let me tell you, their offers are going to come everywhere around the country, everywhere around the world, this and that. And I go, yeah, San Diego, if you have 100 units, I can tell you who the buyer is going to be pretty
Right.
much. We
Yeah. Right.
we know
But we'll have like 10 offers here, and
not
that's
100.
Yeah.
not 50 or
Right.
30.
Yeah, you don't need to
or
go a
100,
million
yeah.
hard day one, like,
Yeah.
and that was, and they're going, and I said, yeah, because everybody just here is scared of the market. They don't really understand it.
Right.
It's kind of,
landlord
we're a little
friendly.
insulated here, but these other markets, it's like scary, the offer, like it's
Oh, it's
crazy.
insane.
Yeah. And you saw it. I mean,
Insane. I mean, in 2021, it was like any decent deal that had a decent pricing guidance, broker listed, would have 50 property tours and like 35 plus offers.
my God.
And by the time you get to best and final, I mean, like we would see what these things would trade for. Like, what are they seeing that we're not seeing? Like, it didn't even make any sense.
Yeah, it's just like
You
a
know?
race to see who will pay the most.
Yeah.
Yeah.
No, it's crazy. I mean, we sold that first 32 unit building. We sold a few months ago. We went full cycle on it. And this is a C-class property, 1960s vintage. It had all the plumbing issues. It had all the repair maintenance expenses. And we only renovated 50% of the units. And this is in a suburb of Indianapolis. And the buyer paid a 3.7 cap rate on actuals, on T3 actuals. And they raised money for the deal. I'm like, okay. It'll probably work out. I mean, they're gonna renovate the rest of the units, and maybe the rent growth will continue. I think it's a good location, but that just tells you like 3.7 cap rate on a C-class property in the Midwest.
That's why we didn't
That's
even
insane,
buy out.
right?
I'm like, I'll just buy in San Diego then.
Yeah.
I can buy
'Cause here-
3.7
Yeah,
cap all day long.
exactly.
And here, they don't build here. You know that.
Yeah.
Like you can't, you know what they're building.
Yeah.
It's only expensive. There's no seeds they're building here.
No,
Nobody.
no.
And so, yeah, Grant Cardone was even saying now, because I know he wasn't really buying deals, but he
Yeah.
says, now I'm talking about deals where somebody bought it for $640 a door. I'm trying to buy it for $480. He's probably going to take crappy debt, but he'll just refi out. I don't know if you heard of Michael Becker, for him.
I know
Well,
Michael
Capital.
Becker, yeah.
Yeah,
he's
so
great.
he recently was on, they were not doing much podcast, but he was on talking about, he said, I was going to buy 8 deals this year. I bought one because I was in exchange, but he's also saying, I told people outside the outside areas, you know, be careful. You're paying almost the same cap rate as like, you know, in town or urban. And now these people are kind of like, oh crap, you know, and a lot of them have the bridge debt and all that. So it's going to be interesting.
Absolutely. I think a great example of that is like the Phoenix market. You know, Phoenix market, Scottsdale, that area, everyone's migrating out there and cap rates are so low now. It's like, well, I might as well buy in San Diego near the water in a climate that has a good year-round weather. And honestly, I'm bullish in San Diego. I mean, if you look at the 4 major markets in California, you got the Bay Area, Los Angeles, Orange County, and San Diego. Well, San Diego is the cheapest in terms of real estate prices, but you could argue it's got the best climate, it's got the best beaches, it's got the most like cool things to do. And then geographically, like the way it's positioned, there's not a lot of land to build on.
We're the 4 walls, right?
No, yeah. To the north, you got Camp Pendleton, and then to the west, you got the Pacific Ocean. To the south, you got the Mexican border.
And then we say we have the mountains.
Yeah,
so
you got the mountains.
and
And
you're
so-
not really building out there. So
And so I'm bullish on San Diego long term if you can, you know, buy the right deal here and then hold it long term.
The
Yeah.
difference
You
is,
know?
it's funny though, because we talk to these like investors from Texas and stuff, and they'd be
Yeah.
like, I own 500 units. And you're like, I own 30, but they're like worth the same as yours.
Exactly.
yeah.
Exactly.
And I think here it's we know a lot of people here that we're like, all of her clients are not syndicators. They're all like mom, pa bought. Some have thousands to 500 to 80 to fit whatever it is, and they just built it here, and they never went out anywhere. And they're not even bullish. They're just like, this has worked for me here.
Yeah.
I don't really want to go anywhere, and I'm not. And so we've been surrounded by that. And then we went and checked out. We're like, look at the map. We're going, is this city better? Crystle's like, no. And you got to get on a plane. You got to do this and that. She's like, where's the benefit? She goes, they don't have rent control. What else?
Yeah.
They don't have rent control.
That's it.
Yeah.
And then, but in Florida, in places where they're going up, they try to put a rent control in West Palm Beach because my dad's there, and they're like, they squashed it. I said, yeah. They started it here and squashed it, and then eventually they got it. So I was like, when you have rent raises that much, it's almost like you're almost going to have it there. So I'm kind of
also,
like,
besides this last boom, appreciation in San Diego is like, I think, easily higher than most other places in the country. So you're going to get that equity build that you're not going to get in a lot of these other markets besides like this last boom or like during boom time. So you have to be strategic, because people ask me all the time. I'm like, yeah, I'll buy in Arizona or Texas or any of these places at the right time in the market. But today is not it. Not at the top. You don't buy at the top. You buy when there's like deals, like
blood in the streets. People are scared.
Absolutely. So speaking of market, I mean, so what the hell happened with Sprout yesterday?
Oh
they
my
just,
gosh.
non-QM and then they just folded.
Yeah, it's funny you know that. Wow, you're in the end. No, I think there's, rumor is, I don't know who, but there's more coming. Okay. So we were, so I'm with C2 financial broker.
Sure. And
they're just happen to be the biggest broker. They're here. And so we were at this C2 Connect event, and I'm telling you the story. It's funny. Yeah. So one of the guys that I know, Mike at Luxury, been in the business 40 years. Everybody gets on stage and has this pitch, and I don't really go to this thing, so I'm hearing him pitch. Then Mike gets up there and he goes, guys, as you can tell by me, I've been doing this probably longer than most of you. And he goes, I'm not going to tell you about our products and stuff. Like, you can look it up. Let me just be frank with you guys. And everybody's looking around like, what? He's like, next year we're going to be back here. Some of you are going to be here and some of you are not. Wow. And I'm not talking about all those. I'm talking about lenders. And everybody looked around. And he goes, so who your lender is, you better know your balance sheet. You better know this. And so to answer your question, it's whether we're seeing it in crypto, we're seeing it in people that raise money to invest it in venture capital, right? Mm-hmm. If you listen to like the All In podcast, if not, I highly recommend it.
I'll have to check it out.
Yeah,
so
it's
good.
Amazing.
Okay.
Chamath and stuff.
Okay.
So I listen to all these things.
Yeah.
So crypto blown up, the VC market where people raise money, never raised money before, went out and invested all these, startups. Yeah. Well, that market's imploding. They're going through a depression. Crypto's going through a depression.
Yeah.
I mean, I think you're going to find, like you said, people with multifamily that raise, either they're going to make it through or they're going to have to sell and loss. Yeah. So it's going to be, Michael Becker said, you're going to be calling your investors for more money. That call's coming.
Yeah.
Just like this is rates were low. And so the problem is you have a lot of lenders take Sprouts. They don't really have a balance sheet, meaning they're not backed by a bank. They're not backed by a fund or somebody. So they have to sell these products, and you start doing all these crazy risky products. It's great. But when the secondary market decides, I don't want it, and they just stop, what people don't realize is that that's where like, I was locked in and they just didn't do my loan. I said, exactly. Like they just sold a tranche of $100 million and took a loss. Yeah. They're like, we're not going to do it again. They just like shut down. So what happens is they do this over and over, and at some point they realize we're not going to recover. Yeah. We got to get out. And so there are some lenders that do the DSCR and stuff, and that's what I look for. Like, for example, Luxury, which people don't know, they're actually 50% of their ownership is by Starwood Capital, which is Barry Sternlicht, he owns $100 billion of real estate. Sure. But they have $10 billion in the bank, and if that guy needs to go get $10 billion more, he can make a few calls. Right. Pretty connected. Right. And so a lot of the other ones we use, they have bank, they're just balance sheeting on their banks. The problem with these guys, they have to sell. They can't sell, they'll go under. And so what you're seeing is all these, Sprouts is one of the most aggressive non-QM. I think they just got way too aggressive. And so what happened at the beginning of the year was, and I was telling this to Krystle, you have Fannie Freddie rates and you had non-QM, and we were like this close in pricing. And I was like, why wouldn't you just buy Fannie and Freddie? Why would you buy this if you're a secondary? And then the secondary literally woke up one day and said, wait a minute, these teams, this is too close here. Like it was like this far and it went to this. Yeah. And they just said, yeah, we're not buying. And so somebody went out to sell a pool of 100 million, let's say, and all of a sudden they're like, hello, where's the buyers? There's no buyers. They pull back and the whole market, this goes and everybody's like, what? So that's why you saw non-QM go from like
hard money rates now.
They literally went,
I know, right?
And they went and just said rates up, no notice. Everybody went from like, you can get a 3.875 to all of a sudden we went to 4 and 8. They just, and then they went out, anybody at 4.5? Nope. Yeah. Okay. Anybody at 5? Can I get a, nope. 5.5. I got a 5.5 here. Take it. And this is what happened.
Yeah.
So there's people that sold all these, and then now I can tell everybody it's a little bit greedy, the market.
Yeah.
They're like, well, you're still doing loans. You guys are still paying for them. So it's 7%. It's 6.
Yeah.
And we have deals in now where people didn't lock, they went up. And I go to the investor, like, what's your investor? Like, yeah, they're not going to do anything. They're staying at this level.
Yeah.
I'm like, but they could come down. Yeah, but they don't want to.
Well, do you think that part of them is trying to make some of the money back that they lost on previous tranches? Like they took such a hit.
No, also the secondary, remember, they bought stuff at 4%. They're like, that's not a big return for non-QM. They're like, yeah, we'll take a 7s for a while so they can balance
Well, you know
out.
who's doing well now are all the private money lenders too. All these little small private money guys are like, sure, I'll take your deal.
Yeah,
I'll make it easy. I don't need all that paperwork.
Yeah.
So you're just seeing like, and I was telling Krystle, Grant Cardone had a guy I was listening to when we were with you, Monty, and Nick gave me the interview. I was listening to the Grant interview, his broker. I don't know if you saw the interview on his 10X. So Grant has a broker that's done $50 billion in deals, and I think it was $5 billion of grants or something, half of it. Right. And he said something about multifamily. He goes, let me just tell you real quick why I like multifamily over a lot of the other stuff. And it's kind of like Fannie Freddie real estate. He goes, Fannie and Freddie always lend. So if there's a crash and the secondary's gone and you're trying to do hotel or commercial or industrial, Fannie doesn't do that, but they'll do multifamily. Fannie, Freddie, FHA, VA, conventional, there's always a buyer there. It's our government. Yeah. So with the non-QM, they can just turn it off like that. Jumbo could get turned off like that. So
and we've seen it like in the pandemic, right when it hit, everybody was shut down.
I think people forget we knew this. Like we were talking yesterday, like to Rose, we were talking about how 120 lenders within 6 months, like last time, imploded. So I think people forget is as much as they can turn it on, things get to turned off. Also, we have the R word approach. Technically we're in a recession. If we had 2 negative quarters, these secondary guys are like, well, what's that mean? Yeah. Real estate's been pretty healthy, but they're like, what are we doing? And everybody's just like, just people buying multifamily, like,
it's kind of interesting. Like I was just saying too to a lot of my clients, we're still lending, sure, but a lot of the executives are telling our bankers, like, you know what, just like go relax for the summer, take a vacation, like just chill. We'll see how this thing shakes out at the end of the summer, like. So I think that's just kind of like the mindset of people right now is just kind of like a wait and see what's really going to happen. And that's what the executives are telling people. So they're slowly, like the people who are aggressive about it, they're just like, that's it. We're just going to stop lending for a while. And then other people are like, we're just going to keep inching up our spreads and make it less attractive. And if you really want to do a deal with us, we'll make the extra margin, sure. But we're not like competing for your deals right now.
Absolutely. These spreads are crazy. We just had a client close on a short-term rental deal, 8.25%, I believe. Yeah. I paid for that Scottsdale property. My hard money loan was 8%.
Yeah.
That's insane. Are you guys seeing a big slowdown right now in refis and purchases because of this environment?
Oh, for sure. Yeah.
Really?
Oh, for sure.
How drastic of a slowdown?
Refis are, I would say, if you don't have purchase business, you're definitely dead.
There's a lot of loan officers that don't have any business. Yeah, we've been fortunate. We're both pretty busy
right now. We're networked and doing a while. It's mainly purchases, but people are doing refis because they have to. But I tell anybody now, if you're refi or buying, you're just going to refi out later. Yeah. I mean, I think what most people, like Krystle saying with the banks, is like from the strategic, from the macro world is inflation. All we're waiting for, it's all about inflation. Yeah. Like the Fed has clearly said, I don't care about anything else but inflation. Yeah. I'm willing to let the stock market tank, housing tank, everything tank. Yeah. Because if you can't get that under control, it's a problem.
Nothing else matters.
Exactly. Yeah. And so they're up against this time clock, which is November, which is not looking good for the administration regardless. Right. But I think when Krystle says the bankers is because we got 75 basis points and they're like, we're doing another 75. And I think a lot of bankers...
They're just starting to price it in.
Yeah. And so a lot of bankers are like, you're a CEO of a bank, you're going, okay, we're hitting summer. And a lot of people don't do deals. Wall Street guys go to their Hamptons house. And, it's summer's a little chiller and it picks back up. And so I think they're just kind of like, well, we can start doing deals, but we could be in the middle of deals. And then they hike again. And I got to tell Krystle's clients, I got to hike you. And then the deals make sense. Why don't we just wait to see what happens? Really, it's over the next 60, 90, 120 days because what they're trying to do is this hike, this first one definitely spooked the market. Like we saw like it rattled, it went over there and rattled the cage enough to where people were like, you just woke me up. Yeah. This next one, I think people are now like, okay, we're going to get it or we're not. So we're just, I told Krystle, you're just waiting for the inflation numbers.
Well, I'll tell you, a lot of my lenders are increasing spreads. So I have clients calling me every day. Treasury's down or rates down. I'm like, nope. Actually, they just went up.
Right.
And it's because they're just increasing their spreads right now.
Yeah.
Everybody's pricing in risk.
Yeah.
So
absolutely.
that's what they're doing. And so we're not really following treasuries as much. And not to mention that most of our banks, they borrow money at prime. So they want to stay right around prime, if not higher. Your non-QM stuff is hard money, but like all of our conventional lenders, they're going to try to stay right around prime. That's their cost of borrowing.
Absolutely.
So it's not necessarily tied to treasuries like in a market like this when things are a little wonky and crazy. Like just because treasuries drop does not mean that rates are dropping.
Absolutely. I like that the Fed's being aggressive with these rate hikes just to kind of get it over with.
Rip the band
Thank
off.
you.
Yeah. But I've heard some, good news that the next inflation report might be a little bit better. Where do you see these rates navigating over the next 2 to 3 months if you guys were betting on it?
So what's interesting is the 10-year. So let's just talk long-term, 30-year, just normal housing rates. Most people do the Fannie Freddie. The 10-year hit 3.5. The conventional rate, we're wholesale, so our rates are definitely better. But I would say the average went to 6%. So that definitely, talking to people in the industry, definitely people were like, oh, okay. And you did see a little pullback from buyers. I don't know what the 10-year is sitting at now. I know yesterday we almost hit 278. I think it's climbing to 3. So we saw rates come down almost 7/8 in 3 weeks, which is good. So it was rates are up, so they come down. The other thing too is, thank goodness we have 50 lenders, we have banks, they have ARM products. So we do a lot of 2 to 4. So I have people going, oh, I got this card rate. I said,
he's selling ARMs now, which you never hear in residential.
But I have, I got people buying let's say a 4-unit property, 25% down. They're going to some lender going, hey, the guy quoted me 6.5 at 2 points. I'm like, well, I just quoted somebody yesterday 4.875 with 1.25 points. They're like, what? All of a sudden it's so luckily I have some of those products, which is helping people out. So, but to answer your question, I think it's just going to be a very rocky road for 2 months. I definitely think
2 months?
No, he's asking next 2 months. It's going to be a rocky road. I also think that regardless of inflation, Powell's definitely going to stick to 7. He's going to stick it to us because he clearly said I'm going to keep tightening even as we go down inflation. He wants to make sure it's down and it stays. He doesn't want to do one of these because then he's he's going to push us. He's going to have some pain.
Make sure it doesn't linger.
But the meetings our bankers are having, they're anticipating rates to go up another point to 1.5 by the end of the year. Okay. That's the talk.
But I always remind people, the stock market, the 10-year treasury, they're actually good to follow because the bond, the treasury market is smart money. They're looking out. So why you saw the 10-year come down is they are thinking recession. Yeah. And so if inflation, I told Krystle, if inflation came out higher, that's really a problem for all of us because it's shit's not working. And at that point, he might as well just go 1.25 and just cut the legs off. Right. If it comes down a little bit, who knows, a guy like Chamath who is saying all in, you'll love the podcast. He's just worried about over the next 3-4 months of gnarly inflation too. Yeah. And the reason why they're saying that is you guys will understand is that the rent data that's come up, it lags. So it comes 2-3 months later. So it's starting to come in the rent housing. And he goes, I'm worried that we're thinking that really wasn't factored. Right. And we might get a bump and people freak out. And he goes, I'm just saying, guys, we have to look at all this. Yeah. Some of this stuff lags and it hits and we're like, why did it go up? Yeah. So, rents are raising. We're raising, everybody's raising. So it's going to be a bumpy road. But if we do, the White House is in denial, doesn't want to say we're in a recession because they don't want to. But at July 28th or whatever, they're going to really come out with the GDP numbers. So we officially, you're going to go from hearing no recession to every news station, we're in a recession, and the psyche goes. But I think people are already starting to say, okay, let's enjoy summer. I've already booked my trip, already paid for it. Yeah. But after summer, I think we're going to see some serious tightening in the consumer.
Absolutely.
I think so.
Consumer spending's already way down, right?
But people already bought the trip. They already paid the ticket. They already paid for the hotel. Yeah. Yeah. They've already booked it, so they're and in their mind, we're going to do this summer trip. Yeah. We're going to do this, but we need to just watch our shit. We
Yeah.
need to tighten the hatchet, you know?
And to your point, I mean, with the short-term rental side, like I'm studying all these different markets that we're investing in and we're buying client deals in, and we're looking at the AirDNA revenue by month over the last couple of years. And like you said earlier in the podcast was, 2021 was a record year for short-term rentals in terms of like market revenue. And a lot of people thought, well, it was because of the pandemic, 2022, people are going to it's going to come back to like an equilibrium. So I was looking at like the data from like March of this year versus March of last year and April of this year versus April last year. The numbers in all the markets we're in are like up another 50 to 60% from last year.
Yeah.
And that's got to be the inflation. It's got to be. And I think there's also more users that are electing to travel via short-term rental, but a lot of that's the inflation. There's just more money in the economy.
Yeah. And then so we might get a little reprieve in the VRBO and the vacation rental sector because people forget a lot of international travelers are starting to ease and let loose, and we're talking like all over. Yeah. And so and so people have been pent up for a long time. So we might, like when we were in Napa, and I always ask, I'm like, hey, I know you get they're like, the international's dead. Yeah. Hasn't even hit. So, and they're still busy. So you can't even get a hotel there. So we'll get hit with it, especially San Diego and different parts. Yeah. But I think, I just think the consumer is definitely going to tighten. I think you'll see it you already see it in Amazon. You already see it.
They're already rescinding job offers and like all that kind of stuff is already starting. Like they're talking about like Facebook and, like Mark Zuckerberg came out and basically said, I think there's a lot of people that probably shouldn't be here. Yeah. And so I'm just basically going to increase my standards. And if you can hang, great. If not, you're gone.
Yeah, no, it's an interesting time that we're in. I got a live deal that I need to refinance here soon. I need to start the process. I was thinking of starting it here in a couple of weeks. I'd love to hear what your guys' thoughts are and if you guys possibly have any loan products behind it. Yeah. So this property is in Scottsdale. Bought it in January of this year. It was a fixer. 7,600 square foot with a guest house. Sheesh. It was 5 bedrooms, 7 bath when we bought it. It's going to be 8 bed, 8 bath with a speakeasy, fitness room. We added a beach volleyball court, basketball court. We got a putting green, pickleball court, and then we're doing like game room, everything. We like basically did a full reno. It's going to be super sick when it's done. It's going to be done here in a couple weeks, but I'm like, let's start the process now and let's schedule the appraisal for a few weeks after, but I'm looking for something to allow me to pay off my hard money loan. And then I have a small second on it. So ARV is going to be about 3.5. And I'm going to owe about 2.55 or so. So I'm looking for the highest LTV, rate and term, ideally cash out. If you do a little cash out, that'd be great. Do you guys have any products for it?
Are you going to do like a DSCR loan, you thinking?
Yeah, I think non-QM, no doc would be ideal. But I'm willing to try the other route as well.
So it's funny. I just, you could look at both, but I was just emailed all of our DSCR lenders because asking, there's kind of like rumor now and it's out there. So they'll start using a what if scenario on vacation rentals. If the appraiser says, hey, this is comparable and gives you it, they'll start using the vacation rental model for income.
Interesting.
To help qualify.
Yeah.
So, I could probably look up and give you some pricing, email you or something, but that is an option. Or with that scenario, look at probably like if we have any banks or something that'll go that high loan amount and stuff. What's your LTV on that? 70?
I think it's going to be around, if we did rate and term, it'd be like between 70 and 75. Yeah.
So DSCR might be the best for now.
Yeah. Okay.
Yeah. You just do IO.
Okay. Yeah. And I can help with some like STR comps out there that will justify the revenue. But yeah.
Has it been a vacation rental before you bought it? Or was it just
not. Okay. No, it has not.
So that you'll need somebody that's you in the future because you're going to get whacked on well, it depends. What do you think the long-term rent would be?
Probably like 15,000 a month, maybe.
Long term. Maybe you could squeeze in. It all depends.
STR would be much more.
Yeah.
But yeah, I mean, however to get it done is all I care about. But I want to get out of this hard money load.
Oh yeah.
And with this climate that we're in, I want to refi before values start to kind of come back a little bit.
Yeah. Yeah. Smart to get it. I can send you some stuff that we have for sure. Okay. We have a lot of good DSCR programs. So.
Okay. That sounds good.
He's like sought high and low too. Just his rates were so terrible for so long. He's like, there's got to be lenders out there that are doing better than like private money rates. Yeah. And so,
I mean, DSCRs are higher, but there's still some. But I mean, like I told people, what I'm telling people is don't do a crazy long prepay on it. Do a shorter prepay, take a higher rate. It depends if you're worried about value. Maybe you'll think differently. Yeah. But Because if there's an opportunity to refi again, you're going to be like, damn, I'm stuck in a 3 or 5 year prepay. Some of these people, like they're in prepays they don't even understand.
Yeah.
They're on a 5% 5 year hard. They're going to go refi or sell. They're going to be like, wait a minute, what?
Yeah.
$100,000 or something. So
It's crazy because in residential, like owners are not.
you know,
used to
commercial prepays,
prepays.
you're
We're
just
yeah.
deal maintenance, step down, whatever. But residential, I don't know, people pay attention. They're like, just get it. They're like, wait a minute, what was that prepaid? They didn't ask. They just said, oh, it's this.
Well, it's crazy because I was actually out having lunch with a broker, a multifamily broker in Cincinnati last week. And I remember, underwriting deals a year ago in the multifamily space. And a lot of these had assumable loans with hefty yield maintenance prepays and all that. And it really killed the deal, right? But now he's like, with the interest rate environment,
they have like no prepay now.
Yeah, he's like, that's really appealing to be able to assume a 3% mortgage.
Oh, yeah.
We just refied a client. Yeah, this client thought he was going to pay a $70,000 prepay on his Fannie loan. And then by the time we closed, rates had gone up so much, we locked him in the lower rate. But his prepay went down to $19,000 from $70,000. So, so
that rarely
perfect
happens.
time
Like,
for people to pay off their agency loans right now.
Absolutely. That's crazy.
Yeah. So what's next for you? What do you kind of the next, let's just say short term, I think long term now is like the next year. Where do you focus?
Yeah, absolutely. And I'm glad you brought that up because I don't think past a year out, because I think
it's kind of hard right now.
It is. And I think like often what I think I want, 2, 3, 4 years from now is going to be different when I get there. Right. But,
I agree.
A year out, the next year, focus on just buying as many boutique hotel deals as possible. I really see that as an opportunity. I think with the multifamily experience and then having an entity that can manage and operate these, it really gives us full control of these properties and business plan. I just think I want to buy as many of them as I can now while there's opportunity before the rest of the crowd jumps in.
Gosh, I feel like a great market, I'm sure you already know, would be like a Palm Desert or Palm Springs.
That would be cool.
Because have you been there and seen a lot of the ones they've done?
So many boutique hotels.
I've been there a few times, but I haven't stayed at a lot of boutique hotels.
Have you gone and looked? Gosh, there's some really it's sometimes you just go there to go walk through them because you're like steal ideas. It's like there's probably, I would say, like in that Palm Spring area, they probably redid a handful of them, like just some of these guys have them. They fly around the world. They send furniture back. It's like crazy. You would definitely pick up some tips.
It's good for inspo because there are so many boutique hotels in Palm
Springs.
Really,
but there are some that are like not nice, kind of running in the ground.
I mean, they cover all aspects. Like you can go to like a cheapo boutique hotel. We went to like this kitschy one time where like one room was like flamingos and the next room was like country. Just like kind of cheeky but cheap and kind of fun. Or you can get
the
like
Raiders used to own it.
Yeah,
that one. Yeah. The lady, they came out. The owner, she goes, yeah, the Raiders used to own this. We're like, what? And they're like, yeah. So off season, they let all their players come and just stay. There's 9 rooms. They stay here and hang out. And they just like, whatever. And then somebody bought it and have all these rooms. So a lot of people just, they just come here and they just rent the whole thing out. It's just their friends and they have a pool. Wow. It's okay, but the location's like prime time. You're just walking right there. So
and they have another one that's like Mediterranean, the Karakia. It's like they brought
that
the
is
owner
crazy.
Traveled all over the world and brings stuff back from his travels. Just like people have really cool ideas.
Email Krystle. She could probably give you some because the Karakia, he has another one in Laguna, right? Yeah. But he's what you're at. Like he's been doing that, but he has the design and basically it's adult only too. No kids. There's no TVs in the room. Yeah, it's very like
self-check-in, self-checkout type of thing.
They had people at the front desk there, but not a lot. Like they serve like a breakfast and like a lunch, and then that's
But everybody kind of like wants to be left alone. Everybody's kind of doing their own thing, and you're not. I feel like you're there to not really socialize.
They probably could just do without staff. I think people are just so used to doing it one way that they're not doing it a different way.
Absolutely. No, that's a fair point. I think the best part about it really is, the regulatory environment. You don't have to worry about the regulations ever changing because that's the biggest risk to short-term rentals. But with boutique hotels, that just takes all that risk off the table. But then on top of that, you get to force your appreciation because it's commercial real estate to where a short-term rental, it's like, you can increase the revenue and all that, but it's really just going to be appraised as the comps are in the neighborhood, versus these hotels, which I love. Exactly.
What's your thoughts on the short-term rentals policy going in here? It's been taking forever.
I honestly think it's a good thing. I think it's a good thing for those that are creative enough to figure out a way to operate. And I actually like targeting markets right now that have, regulations coming down the pipeline. Like, let's go buy boutique hotel deals in those markets, But as far as here in San Diego, this is my thought process. I got a few short-term rentals here. One, I'm going to try to get a permit, right? So I think if we can get a permit, it's going to bring a lot more demand to those properties that can operate.
I agree.
If not, I'm going to continue to operate. There's a lot of markets in California right now, Sacramento being one of them. We had a guy on our podcast. He's got a bunch of STRs in Sacramento. They started regulating 4 years ago. And he's like, no one's ever told me to stop. And so I don't know if the city has the wherewithal to regulate it. And if they do, then the fallback is always midterm stays, right? Because here, short-term rental was defined as anything less than 30 days. Well, if you go 31 days or greater, no one's going to stop you. And then the last case for scenario is you can just sell, move your equity to another part of the country.
Yeah.
I mean, the good news about San Diego is you hold your value. I mean, like the properties, if you can hold on through a little bump in the road, like I remember last recession, I remember prices went down for a short period, but apartments by 2010 were already surpassing the boom time prices. Like we were already higher on values. So you're perfectly,
not
you're
everywhere
totally
but here.
Like, no, but if you own in Southern California and San Diego and you can't operate as vacation rental anymore, chances are you're still going to keep most of your equity and sell. You can sell.
Yeah. No, absolutely. And there's all these other models. I mean, you could go rent by the room. Like with that Linda Vista property, I'm going to convert that garage here as soon as we get permits. So now it's going to be 3 units, right? And so with rents going up, even if I had to go to the long-term model, like it would still pencil out,
Because you got to get like per unit a license, right? It's not just the property, which is kind of crazy.
So, but it's like it's shocking how little information the city has if you actually ask them. You know what I mean? No one knows what's going on.
I honestly think because I told you Jonah is very involved. Like he was at the forefront of it all. Like I told her I show up at this house in La Jolla and I'm sitting there and this guy comes with the backpack in, like, who is this guy? He's like, oh, this is the CEO of HomeAway.
Yeah.
What?
Yeah.
He was the CEO of Expedia. This guy's in here and he goes, we're going to take, just starts going off for like what? And that's when they had to go get the signatures and stuff, 750,000. But it's not that the loopholes, but I feel like the city's nervous about it because like, oh, we're going to look at 7 years. And I hear somebody come out and say, we're going to look at it in every year. And I'm thinking,
right now they're saying every 2 years.
We were talking about it. We're like, do they actually like really, really like not just, is this emotional or do they really like understand? Like we're saying is like,
they do
we're in La Jolla Shores. We're like, we own little bungalows. Like we're like, this isn't a house in the hill next to 10 million. Like, so, but I'm like, did they run the numbers? Like what that gets to this? And like, we're at 95, they're at like 50 cause we live near whatever. It's like, did they run the model? Did they understand? Like we're near a commercial. Like, why didn't they like really target more? I think they really did a disservice by like just saying, this is how it all should be. Cause when you build a hotel
only did
or
Mission Beach, like that's the only carve out.
Yeah.
But also
like,
we were saying when you build apartments and
Right.
hotels and restaurants, you look for certain areas, you allow this and that. I feel like they just made everything's the same. Like actually, no, a house in Poway is not the same as a 4-unit in La Jolla PB.
Yeah.
It's nobody.
to the
It's,
beach or
yeah. I
something.
mean,
I completely
and I
agree.
just feel like we should just had a little bit more common sense but maybe they'll let it go and maybe it would be a shit show and it'll change, but they'll just keep pushing it off. I
I
think
can't imagine it's like going to be an organized effort. Like you said, like they're already behind on all the things they're doing now.
Yeah.
Much less now they're going to create this whole like new department to, police.
And that's what I was told by the
vacation
people there. They're like, so in other places, they've never really been able to regulate it that well. They've tried, like you said, they haven't. How are you going to do it here? Because you haven't been able to do it. Oh, we're going to have these people. You're like, so you're going to have 13 people for, 7,000 units.
Yeah. No, that's crazy.
So I can tell you, if you manage 7,000 units, it just like normally you couldn't do it with 13 people, as you and I know, right? Like there's no way. You have to have like, another one in front of 170 people. It's like,
absolutely.
so I think you agree with you. I think people are just kind of running. It's just.
But I just don't think they okay, I'll give you an example. There was a deal a year ago and it was 18 units, 2013 construction in Lida, Italy, which is where I live. It was a block off of India Street.
Okay.
And I was like, man, the way that these units were set up, they all had they were pretty like nice lofts. Some were 2 bedrooms. There was a couple 3-bedroom units. I thought, wow, this would be a great STR. And it was zone commercial, mixed use. And it had the hotel designator, but it was operating as multifamily residential. And so sizing up this deal, the broker didn't even have any idea that it had that designation. And so went to the city and I said, hey, can we operate this as short-term rentals if we convert all these over? And they said no. And I stopped there, but I'm kicking myself today because I should have got like a real estate attorney involved or a land use attorney involved and actually did a little bit more due diligence.
I want to be a hotel.
Yeah.
Let me be a hotel.
Absolutely, because that would have been such a nice property. So I don't know, we'll see, but that ended up trading.
Because we learned like from our friend who's a developer, like all that downtown property and stuff in like Little Italy, it can be pretty much anything.
You know
When it's
Ramy
commercial
Cortez?
I don't.
Oh, he's okay.
Yeah, when it's commercial zoning, it can be like anything.
Yeah.
I mean, it can be retail, office,
But
residential,
But
hotel.
the deal in La Jolla, though, right? The deal that we did, they got it all designated under the hotel, right? Like
Yeah, it was hotel designation.
all of it,
Yeah.
which is
That's
like
the Pantai Inn.
it's sold right there.
Yeah.
We did.
And it looks like little apartments. I mean, it could easily be
We did the
apartments.
financing, and then, but it was like we looked, and it was like all they got it all designated. I'm like, how would you ban this? It's right there. What? Like it's like who are you bothering? The other hotels or the
Right.
restaurants or the bars or
Was that the deal that was like kind of painted brown? It had like brown wood,
Yes.
and it was like right on the water in La Jolla.
Yeah.
Yes.
Yeah, like the little bungalows.
Yes,
that was a
yes.
cool little deal.
And it's kind of like Bali style, like the little sign there had like the little waterfall, and they had all the like carved wood and stuff, like pretty cool.
I mean,
beautiful property.
Krystle,
Yeah.
Krystle knew the numbers. I mean, do you think it was a deal to make money on if you rehab? What
for
do you
sure.
think?
Yeah, and it wasn't operated efficiently because they were hotel operators, but they're used to operating larger hotels. So this was kind of like the redheaded stepchild.
Out of their wheelhouse.
And even then, they did really well on the sale.
Yeah.
But they just didn't have operations like as efficiently. You could tell they put their like C team at this property, and like the A team was
They
like at their
they
other
shut
big
down the restaurant. They had a rooftop bar that they just kind of like a lounge up there. You like go and you're sitting up there. You're like, there's a rooftop with this view. And
not even utilized.
bird shit everywhere. You're like, you walk up and you're like, what are we doing here? You're in La Jolla, like so. Just like
But
you
also,
see
you
something.
can't buy it for 1.5 million.
Yeah.
It went for like 25 million.
Yeah,
or something,
that's
you
the
know?
problem. Yeah.
Trying to live, yeah.
Big money. Yeah. But that was the designation. So I don't know. I just think people are going to get crafty, creative attorneys. I think there'll be class action lawsuits.
Yeah.
I mean,
absolutely.
people forget we have 35 million people visit San Diego a year.
It's insane.
People go, wait a minute,
insane.
what? I go, yeah, 35 million.
Well,
People
also with
go,
all
what?
the conventions and
Yeah.
like things like that, how are you going to house all these people?
Parents coming to visit students, military people just coming to visit their sons, daughters, whatever family, right? Then you have conventions, then you have the business travel. Like look at all the travel for tech, biotech, all this stuff.
Yeah.
Then we got all the vacationers.
Yeah.
It's like
I think when you live in an area where it's 80 degrees in December, it makes sense. But like you're so right, like all these like short-term rental markets, they're all seasonal around the country, and we're always pushing and pulling on these things during low season to keep them full. But here, we don't have. It's so hands off. I mean, these things just
We're like
stay full.
95% occupied.
Yeah, same. We're 97.
Yeah.
every
and
year.
we want to
something like that. Yeah, it's
and we
crazy.
want to redo a couple of ours. We don't have, and we're like, why are we shutting this down? Like,
Yeah.
we have to like
Right.
we have to there's no, it's not like no, we have to not cancel. But then we're like, how do we know we're going to get all this stuff in? Because the back, so we're like, let's just keep it
Yeah,
going.
let
I
it
mean,
ride.
no,
you
it's
don't
like
need to.
you have to lose money. It's not like okay, it's winter. There's nobody here anyway. It doesn't work like that. It's crazy. So
Absolutely.
yeah, this has been a fun conversation.
Yeah, we covered a lot of things.
Yeah.
Yeah.
Yeah,
been
it's cool
super
that
fun.
you're local, or like we're doing so many Zooms and not face to face. So
Yeah, absolutely.
it's like, yeah.
We'll have to get you on.
Tell
my
us about your
soon.
podcast before you go too, and where
Yeah.
people can find you. And
Yeah, absolutely. So I host a meetup here locally called Beers and Deals. It's once a month in Little Italy at the
Oh, cool.
Ash Social. And we're actually looking at starting another one, which is going to be kind of unique. Love to have you guys out. It's going to be called Cocktails and Cashflow. We're going to partner with a private yacht out here in the San Diego Bay. It's going to be the fourth Wednesday of every month. It's going to be small, intimate group, just 50 people, fully catered, sushi, bartender, drinks, DJ, saxophone player, and have a good time and just kind of rub elbows with some other real estate investors. And then have a podcast called The Multifamily Takeoff, where we just interview other partner investors. And you can also learn more about me on fortunecribs.com. And then Instagram, social media is rich_Summers, SOMERS.
And you have a ton of really great content too for investors and stuff. So I definitely recommend people go to your
yeah, I mean, the fact that you started at 19, you're doing your thing. Like, congrats on like just getting out of like it's like hard. We talked to a lot of people. I'm like, it's got to take some
we
guts.
always say like get off the sidelines and get in the game,
Yeah.
and like congrats to you for doing that because it's
Thank
a
you.
scary first step.
It was scary for sure. But looking back, it's not scary anymore. But thank you so much.
Yeah. Thanks for coming on.
Yeah, appreciate it. Thank you.
Awesome.